In today's video, I will be covering what the benefits of long-term investing are, what the benefits of short-term investing are, and what my investment philosophy is on long-term versus short-term investing. So the first pro of long-term investing would be that fees are very limited. When you are buying a stock and holding it for years, you have your initial fee of $5 for purchasing it and then another fee of $5 for selling it. With short-term trading, you're getting $5 fees quite frequently because you're buying and selling all the time, but with long-term investing, this is very limited. When you're only buying a small amount of shares, fees really eat into your profits. If you're spending $500 on a stock and you end up paying $5 in fees to buy it and $5 in fees to sell it, that is 2% of your trade has been eaten up by fees. So you need your stock to go up by 2% just to break even. So with short-term trading, this is a serious problem. Long-term investing fixes this problem by minimizing your fees. Another key benefit of long-term investing is a lower tax rate. When you hold a stock for longer than 1 year, you are taxed at a capital gains rate of about 15%, versus if you hold the stock for less than a year, you are taxed at your ordinary income tax rate. So this is anywhere from probably 20% all the way up to maybe 45% if you're in the highest tax bracket. So by holding a stock for longer, you end up paying significantly less in taxes. Short-term trading is pretty much trying to make profit based off of the volatility of the market. So you're trying to buy it down low, sell it up high, and then repeat pretty much and just buy and sell over and over again. And so this can work well if you're good at timing the market, but timing the market is extraordinarily difficult. Very, very few people are successfully able to perfectly time the bottom of a stock, then time the top of a stock and buy super low and sell super high. So long-term investing is a perfect solution to this. If you find a company that has good fundamentals, you buy into that company really at any point. If the price looks attractive, so say you buy Apple in June or July of 2016. Apple was trading down for around $90 a share at that time. So May 13th, 2016, I bought Apple just around then. It was in, I think May, it was about $90 a share. You would be up 70% since then. So this pretty much, I saw Apple had a price to earnings of 10. I said, why is the largest company in the world trading at a 10 price to earnings? They have low debt, high cash. They're a very stable company. Everyone uses their product. They're a great company. They have a good value. I'm a fan of the company. I use their products. And so I bought in and I'm planning on holding it. I don't know when Apple's rally is going to stop. And I would love for it to keep going. But if there's a short correction and Apple looks like it is undervalued again, I'll just add to my position. And so I'll continuously reinvest my dividends. I'll make another video on why dividend reinvestment is so beneficial at a later date. But pretty much what you're doing is just buying a company that you think is undervalued and you're holding it for the foreseeable future until something changes fundamentally with that company. So while I'm not a fan of short-term investing personally, there are some pros to short-term investing. So the main pro of short-term investing would be that your money is not tied up for long periods of time. You're not going to be invested in a company for 3 years, so your money isn't in the market for 3 years where anything can really affect the price of your stock. If the president says or does something stupid, that's going to make your stock go down, even if the company has had no change in their fundamentals. And so short-term trading allows you to eliminate this particular risk from investing. And so maybe if you are going to need money right away, then short-term investing could be beneficial because you'll be able to be in a stock for a few days or a few weeks instead of a few years, and you'll still have your money to spend on other things. Or if you see something like politics affecting the market, you could take this buying opportunity and buy in at the lower prices and then sell a week later if the market rebounds. which if a long-term investor already has all of their money tied up, they would not be able to capitalize on this opportunity. So I do prefer long-term investing. My philosophy is buy it when it looks undervalued and then hold it unless the fundamentals of the company change. If the price goes down a lot, but the fundamentals haven't changed, I'll be adding into my position more. Um, and so I prefer long term investing because the fees is a pretty big deal for me. I'm only investing $1,000 maybe into an individual stock, and so $10 in fees will have a big effect on my profits. That's 1% right there, $5 for buying, $5 for selling. And then also taxes. I would much rather be paying the lower 15% capital gains rate tax on any profits that I make from my investments than paying the taxes at my ordinary income tax rate. So, like I said, I prefer long term investing. There are definitely reasons to prefer short term investing. What do you guys prefer? Comment down below whether you guys like long term or short term investing and why. Thank you guys for watching. I really appreciate it. Please remember to like and subscribe.